This week was dominated by one theme, COVID. As lockdowns spread across Europe and cases surge at home in blue states, fears about the recovery are back. This pressured blue chip stocks, oil, and the broader market. The Dow slid 200 points and ended at its lowest level in 3 weeks. The S&P 500 did notch a slim daily gain, but the Nasdaq Composite set a fresh record, boosted by the stay-at-home trades that were familiar for much of 2020. And in other news, the U.S. House of Representatives passed Biden's $1.75 trillion bill. Now the legislation will be sent to the Senate. If passed, the act would likely provide only a small boost to economic growth next year. On the other hand, it will keep the dollar printing press running 24/7. The deficit will continue to grow, and it should help fuel more inflation. So we got that going for us. And in other news, Biden told reporters to expect the announcement of a nominee for Fed chair in the next 4 days. But all the markets want to hear about is a Fed tapering. And in other news, after the jury decided to acquit Kyle Rittenhouse of all charges, be ready for the mostly peaceful riots in Chicago, New York, Portland, Washington, D.C., Philadelphia, Los Angeles, and Kenosha, Wisconsin this weekend. So, while the fires are burning, let's take a look at the charts. And today we're going to take a look at one chart, which is the 1-year daily chart on the spiders, the SPY, and the close on Friday was 468.89. Now, this is sort of an extension of the weekend update last week. So we talked about the bottom and the basing, the move on up to this point in here, and then the contraction with the bounce, and then the upward move. And we were wondering whether or not that this move here was going to surpass the previous high, and that was something that I wanted to watch out for. So we're still in this area here. We haven't quite pierced through and up and above convincingly, so we're still on watch. But the thesis was that we are going to repeat this pattern from back here. Again, that bottom there, the move on up to this high, which is somewhat synonymous to this high here, the move on down, and then the move up and sideways. It did go higher than this previous level here, but only a couple of times and only briefly before it came down, contracted to a little bit more serious of a pullback, but it wasn't a crash. I think it was a garden variety pullback, and then it was on its way. So I think that's what's happening here. We're doing this, say, sideways and slightly upward movement in the price. We'll come up here into next week, the week after, and that's when I'm going to be expecting some sort of contraction down to the 20 EMA, perhaps down to the 50 EMA. Now let's look at the oscillators, and you can see that in the MAC here, where we had this previous high. We trundled on down in the fast line. The fast line crossed through the slow line, but this area here was where the market was still trying to head on up, and it actually did reach a couple of times above the previous price high. Finally, the contraction took hold and we came on down here. So same sort of circumstance. We have this high here. The fast line has come through that slow line, but the price is trundling sideways to upward while the fast line is moving on down. So it's a struggle between the oscillators and the price. But I think the price is really kind of winning out. So even if the fast line continues down as it did back in this, say, April to May time frame, I think we'll get a contraction in the price, but I don't think it's going to be really all that serious. It's going to be a garden variety pullback. Now, moving on down here into the histogram, you can see from that top we continue on down, but it's not really all that serious of a move below that zero line. Into the price rate of change, it's still elevated above the zero line, so there's still some strength here, and it's pretty stubborn, doesn't want to head on down. Same thing in the RSI. We're at a moderate 66.58, but as you can see, there's no real hurry for any of these oscillators to head south. Same thing in the stochastics as well as the Williams. As you can see, a lot of reluctance in these oscillators to head south. So I think there's plenty of strength in the market, regardless of what's happening in the news. Back on up to the price chart, and as you can see, we're heading, say, sideways with a little bit of upward bias, very similar to these circumstances here. So this, I think, is going to provide a very good pattern of what's going to happen here in the next few weeks. Now, there's always a chance that something else could happen. That's always a possibility, but I think the probability is we're going to repeat the pattern that we have here from April through June. So watch out for that. And for today, that's ChewDog Charts. Thank you.